Welcome to Finance Deep Dive. Today, we're diving straight into the big story shaking up the commodities market, that sudden cooldown in gold and silver. After an absolutely massive run-up, prices are finally starting to slide, and we're here to figure out exactly why. After such a stellar run, one that made precious metals the talk of the town, a lot of investors are looking at the charts and asking this very question. Is the incredible momentum we've all been watching finally coming to an end? Is the party over? So let's just set the stage for a second. It really wasn't that long ago that gold and silver were just on a tear, hitting one record high after another and making a lot of people very happy. But that amazing upward trend has started to hit a wall. The shine is, well, it's coming off of it, and prices are coming back down to earth, which is definitely raising some eyebrows across the market. So what's really going on here? This isn't just some random market wobble. There are four pretty distinct and powerful forces that are all putting downward pressure on precious metals right now. The first one, and you could argue it's one of the most important, is the incredible strength of the US dollar on the world stage. It really just comes down to basic economics. You see, gold is priced in US dollars. So when the dollar gets stronger, anyone holding another currency suddenly has to pay more for the exact same ounce of gold. That extra cost naturally cools off demand from international buyers. Okay, the second force is coming from a totally different place, the bond market. And this is all about what we call opportunity cost. Think about it this way. Gold doesn't pay you anything just to hold it. Bonds do. So when bond yields go up, investors can get a safe, guaranteed return on their money. Why would you hold a non-yielding metal when you can earn interest somewhere else? It's a pretty simple choice that pulls money away from gold and silver. Third, let's talk about the economy as a whole. The classic reason to own gold is as a safe haven for when things get chaotic and uncertain. But when the economic data starts looking good, when inflation seems to be cooling off, and things just feel more stable, that need for a safety net kind of fades away. Investors get a little braver, they're more willing to take on risk, and the appeal of holding gold just isn't as strong. And that brings us to our fourth and final factor, which is all about market psychology. It's a classic case of people deciding to sell while they're on top. Just imagine it. If you've been riding this wave up for months and you're sitting on some huge gains, it's only natural to want to cash in. So as more and more traders decide to take their profits off the table, it creates this big wave of selling that pushes the price down even further. Okay, let's pivot for a second to silver, because while it's moving in the same direction as gold, its fall has been way more dramatic. And there's a very specific reason for that. This is the key difference between the two. Silver isn't just a store of value. It's a critical piece of the puzzle for manufacturing tons of stuff. We're talking everything from solar panels to electronics. So when industrial activity slows down, especially in a powerhouse like China, demand for silver takes a direct hit. So with all these different factors swirling around, where do the experts think this is all headed? Well, the big banks are watching this very closely, and some of them are starting to sound a little cautious. And look, we're not talking about a small dip here. Some of the biggest names in finance are forecasting a potential correction of 10 to 20% in the next few months if these trends hold up. That's a pretty significant number. And here's an even longer-term projection for you. In a world where global growth gets back on track and investors start moving back into stocks, some analysts actually see gold falling below the $3,000 mark within a couple of years. However, and this is really important to understand, this is not a sure thing. The market is basically being pulled in two different directions at the same time. It's like a giant tug of war. On one side, you've got the pressure points we talked about, that strong dollar and good market vibes. But on the other side, you have some incredibly powerful support pillars. The risk of future inflation is definitely not gone. Geopolitical tensions could flare up in a second. And hey, central banks are still buying gold. Any one of those things could send prices right back up. So all of this complex information, all of these competing forces, it really just boils down to one fundamental question for any investor trying to navigate this space. Is what we're seeing right now just a healthy, temporary pullback after that huge run-up, maybe a chance to buy the dip? Or is this the beginning of a much deeper, more fundamental reset for the entire precious metals market? That, right there, is the billion-dollar question. So that's our breakdown of the forces moving gold and silver. If you like the content, don't forget to subscribe to Finance Deep Dive. It really does motivate us to keep posting.